The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. I posted the chart sent to us by our friend Jerome, and I really enjoy this chart. This is a picture of what the moon cycles look like going through from new moon to full moon, folks. It's really spectacular to see how the spiral is there and how cyclical it is in nature. I've always said that someday I hope to see a whole segment on CNBC or Bloomberg about astro cycles. It won't come from me. It'll come from somebody like MIT or Stanford or Oxford, Cambridge, someplace like that where they show these relationships. They're not going to be perfect. They never will be, but they'll be close. That's the main thing that we've got to remember, that there's something there. But frankly, I've never been able to find anything anywhere near 100%. About the best things we look at are the lunar cycles because they're easy to see. They're 14-day cycles and 28-day cycles that are real easy. But when you add Mercury and some of the other stuff, it gives you some really good spots. And you have to admit that, you know, some of these calls that these guys have made, like Shane Smolian, who will be our guest at the half hour, Tim Bost, Arch Crawford, and don't forget Norm Winsky. He's called the top a couple of times back in 2015, and also the bottoms. We've had some really good moves here. So that's something that we always look forward to. But remember, it's all about risk control, and that's the main thing that you have to do. Now, one of the things that happened over the evening, over this long weekend that we had, is we had some results coming in from Hong Kong that were just absolutely unbelievable. I mean, the market's up 2.5%, but Hong Kong and China came out with GDP, I believe, of 6.8%, which is really amazing. But let's just move here to the Hang Seng Index here, folks. Let's get this up here and take a quick look at it. Here it is. This is going over the past year. You can see the ABCD structure here. The important one to look at here is the one here on December the 21st. That was it was 19 days ago. It's been up 19 days. If you go back into the one on November the 2nd, that also went up 19 days. That makes that ABCD. We're at a 1.618 expansion, but we blew through that right on the close. We got above 29,000, I think 29,500, I think, but it's very, very overbought up here. And, you know, it could go, certainly can go a lot higher because anything can go up 19 days, you know, can go up 26 days or 46 days or 96 days. You know, we don't know the answer to that. But this is a completed pattern in here, and it's very interesting to take a look at that because the news coming out is you get it from both sides. Some of it's negative, some of it's positive, as usual. But the fact that these companies and countries are bouncing back from the COVID is a pretty good sign. Maybe down the road, even we will be looking at those numbers, but we'll have to do one thing at a time. Now, let's take a quick look across the pond here over at FTSE, and you'll see here that the German FTSE is not German, Larry. The FTSE is English. You'll see here we have a nice little Gartley forming here down around 6,600. We made the top here back on January the 6th at 69.25. So we're still in a very strong uptrend, and nothing has changed that so far. And then if we take a look here, I believe this one will be the German DAX. And we'll take a quick look at this. Here's where we are. You'll be able to see it right here. This is also in an uptrend. You can see the lines there, the BC lines and the CD lines are just showing you what the rate of change is on what these things are looking at. So right now, on the shorter term basis, you can see we have a short term downtrend. We have a longer term uptrend. So how do you trade that? Well, you have to decide what time frame you're going to be trading, folks. And that's what the bottom line is. That's what your responsibility is. If you're going to trade a longer term, it's very, very bullish. You're going to take shorter term, it's not so bullish. The trend is determined on the time frame that you're using. Because if you ask somebody what's the time frame, on the stock market, you'll say, well, it's short term, it's bearish because we topped at 38.23, we went all the way down to 37.42. And from that level, what did we do? We rallied up to 37.90. So you have to determine what time frame you're on, and that'll give you an idea of what you're looking at as far as the trend that you're looking at. And that's the way pattern recognition trading is, folks, and that's why I think it's relatively important. Okay, now I wanted to switch over to the Nikkei. This is the Japanese market. I want to get this up here. It's a long stories in here, folks. Let's go back to 1987. If you'll notice the big correction there on that weight at the top at 39,000, we had a big correction. That was a 38% correction that came in on October the 19th and 20th of 1987. And from there, the market went straight up, and it bottomed. It topped on Christmas Eve at just under 40,000. I remember there were pictures of one of the magazines showing 40,000 Nikkei. And at this particular time, CNBC, which was relatively new as I recall, it might have been, I'm sure it was CNBC. They were in front of the Imperial Palace, and the reporter had a $1,000 bill with Grover Cleveland's picture on it, and he set it on the ground. It's about 5 by 3 inches, and he set it on the ground, and he said, this is how much real estate you can buy in Japan for $1,000, 5 inches by 3 inches. And you can build a really nice 3-bedroom apartment straight up if you do it correctly. Now, you'll notice here that we went from 39,000 all the way down to the low that we made in the 08. We made a lower low than we did in 03 at 7,800. I remember this very, very well because one of the really famous guys who's passed away, I really enjoyed his work. I'm not going to say his name here because he said that there was absolutely no chance for the Nikkei to rally from this level, and that was at 7,800 because the news was so bad in Japan. And if you'll notice here that we went sideways from 09 all the way to 2012. That was after 9/11. But if you notice here, this it finally took off and went up from that level. Hold on just a second here. But anyway, this is where we are now. We're setting in a multiple ABCD pattern, a 3 drive to a top pattern. That's what we're seeing across some of these Asian things, folks. We see it in the Nikkei, we see it in the Hang Seng, and we see it in the Chinese market too. So those are just some of the ones that we're watching. That this is going to be a big year. 2021, I've said, will be a bigger year for volatility than we've even seen in the past. Which last year, we went from 10 to 56 or something like that. We're now sitting around 25 or whatever it is, 22, and I think we're going to see going far above that 52 level sometime in the near future, whatever that means, sometime between now and the end of the year, if that's much help. All right, let's take a quick break here. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're back, and I have Brent on the phone from California. How are you, Brent?
Hi there, Larry. How are you?
I am very good, my friend. Thanks for getting up so early. What can I help you with today?
I've been spoken with you for a while. I just wanted to wish you and your family a Happy New Year.
And same to you, my friend.
Yeah, my question for you is about gold. And I just, in general, I've been, of course, more bearish since it made that top back in August. And then we had that a pretty nice retracement from the March low to the August high. It was like a 618 retracement up to about 1960. Which was a pretty good place to go short. I did pretty well there. I just was wondering if you had levels now that you're looking at potentially to the upside where you would consider shorting again.
Okay. Now, I posted a chart in here over the weekend from the newsletter, and we went down to a 78% retracement yesterday. We hit the low overnight at 1,880 cents. And then from there, we've rallied $40 an ounce in just one day, which is a pretty positive sign. I think that we have a possibility here of still being bullish longer term, but my bullishness is being tempered a little bit because we've been in this bear market now since August the 11th of last year, and that's a pretty long bear market. So, and we had this really strong move during December where we went from 1767 all the way up to 1967. We rallied $200 and then gave 78% of that back already. So now is going to be the key. These next few days is what's going to happen, to the gold market. I think we've made some type of a significant bottom here today. Actually, it was made Sunday, and that was right at 1,800. And now we're going to see what the rally is. What I'm watching for short-term, as you usually know how I trade, Brent, is I'll be looking for a 38% retracement to come in somewhere around the 1827 level. And if that holds, that gives me a really good spot to buy the gold and not risk more than about $8. So if it doesn't hold the 382, I'm going to be out of it. I'm a little concerned, because all these assets have been going up. All the grains and meat and everything, oil, everything's been going higher, and yet gold hasn't been. And that's one of the old favorite assets of people that worry about inflation. And of course, we haven't seen inflation here for 100 years, but it's coming. I mean, we're going to start seeing it in food very, very shortly. So that's what my premise is. So, and you have to mix in what the U.S. dollars here. We've got so many things going on in the gold market this year. This thing could go to 1,000. It could go to 5,000. That's how crazy it is.
I did have one other question, Larry. I know it's been a little while since you've had Bill Meridian on, and my recollection is that he was thinking that gold could put in some kind of low in March. I could be wrong about that, but
yes,
he's been, of course, spot on with oil, and maybe there's a chance you can get him back on at some point, too, to discuss that.
Okay, we're working on that into the future, but I will have Bill's charts here coming up very shortly, and I'll post those for the oil and the gold. I think I'll have them probably by early next week, and I'll put the charts in to let you see, what the cycles look like. He's really good with cycles, and we'll put those in to have you take a look at them.
All right. Thank you so much, Larry. Just have a great
thank
day.
You, my friend.
Happy New Year, and you take care.
You bet. And I hope if the weather gets better, you can come over and visit us over here in Arizona. We'd really like to see you again.
All right. You take care, Larry.
Okay. You bet.
Right.
Okay, folks, let's move on here, and we'll take another move here to take a quick look at. We've covered the gold. I'm going to take a little down memory lane here just a little bit. Elliott Wave put a really neat chart up that I think I'm going to share with you folks, because it shows basically, hold on here 1 second. I will check that. Mr. Z saying that he thought that Bill had a top in January, February. I remember December was supposed to be bullish, and since it wasn't, he was saying that could be, but I will double check that. I can't remember it. I can't remember all of it because there's just too much, but that's what we're with. Here's the 9/11 attack. Look what happened with the 9/11 attack. We were closed for I think 9 days, and then when it finally opened, 5 days after the opening, the S&P bottomed down there. This is the Dow Jones, by the way, bottomed down at the near the 8,000 level. From there, it went from 8,000 all the way up to 11,000. And it took 6 months to do that. And then what it did, you can see the big ABCD there. It bottomed in the late fall of 2002, and then made another bottom down at the 78.6 in 2003. So these news items and things that you see, these are just doing what's happening. It's working the way it should work. And that's what cycles are, folks. I posted that chart of the moon up there with other things. You can imagine all the other cycles that are up there that are making these things move around. So I think it's important that we realize that, just because we have an economy that's been shut down very, very badly, many people are out of work, unemployment's worse than it's ever been. All this has happened very, very quickly in a matter of a year. Remember, it was this time last year that the ban came in from China, that we didn't allow planes coming in from China, and China had been sending them all over the world. That's only been a year. And this pandemic, it's been really bad, but it's nothing like the Spanish flu, for heaven's sakes. Give me a break. The Spanish flu killed 50 million people. Maybe we're going to kill 50 million before it's over, but they're not happening now. All right, let's move on to Bitcoin. I have so many questions about this. This is what we're looking at here in Bitcoin, folks. Many people are saying this is a bubble once again. Remember, we had a bubble back in 2018. We went from 19,000 down to 3,100. From 3,100, we went to 42,000, and we backed off a little bit here. We're chopping around. I don't see this as a top. I don't know much about Bitcoin. Well, that's the understatement of the year. I know very little. But if you blow the chart of Bitcoin up, you'll see here, looking at this over a 10-day period, you'll be able to see that you have a very nice ABCD pattern coming in here at 28,000. And if you believe in patterns, that's the kind of thing that you want to remember, that that's where it should stop. When I did the first live trading thing back in May of last year, we looked at one particular coin, which was ADA, which is Cardano. The symbol is ADA. It was trading at 6 cents a share, setting at a 61% retracement on the longer-term chart at 6 cents. And I said, this is, if you want to take a shot at it, you can buy, 1,000 shares for just a very little amount of money. And from 6 cents, it's now trading at 43 cents. So you made 7 times your money in that if you were in that. And I've said that if you're going to hold it for $10 a share or lose your 6 cents. And that's basically, what you're trying to do here. So whether that's going to continue to move, I don't know. But the story on that is that we'll be right back. 877-927-6648. Stay tuned for Shane Smolian.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim.
For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we've got Shane Smolian, wolftrader.com on the line here today, sharing us some of his early views of 2021. You want to go ahead and start, my friend?
Good morning, Larry. How's everybody doing today on this short trading week?
Looking good, feeling good. We're ready to go.
All right, that sounds great. So what I'd like to do today is I'm going to do a little bit of a rewind and look back at 2020 to see how some of these Astro indicators did and the Fed use did in 2020. So I'm going to summarize the year in just a minute here. But I'm going to start out with the Fear and Greed Index here. As we always do, I like to look at this because it gives it a nice sentiment gauge. It's a little bit higher now at 60, so it's at a level that is considered greedy. It's not as high as it was in the high 80s, but you could definitely say now this is definitely tipping more towards a bearish look on the market. So just to point that out to start out the show here. So I want to get back to the Planetary Speed Index here because I love this indicator so much. I think it's the best Astro indicator I've ever seen. It's not optimized, nothing. It's based on this aggregate that I've summed up here of the planets and how they're moving. And it modeled so many things well. It modeled the COVID crisis. It modeled the COVID low. It modeled the June lunar eclipse plunge. It modeled the October peak. And it did all of this even with the Fed use. In other words, it works very well with the Fed use. So you can see here, this is the Planetary Speed Index during COVID. When it was falling, the market fell. And then it also made a low over here with the market. So I really like this Planetary Speed Index because it models the S&P so well. So these are medium to long-term range tools. If you go back here, even back into this October rebound into here, I'm in the late 2020 now, but you can just see like right before the election here, it models this very well going forward. So what I'd like to do now is rewind and look at how did this actually do? Because it's one thing to look at arrows on a chart. It's one thing to say, okay, this is the graph, here's the market, but how did it actually do? So these are what I'm going to do is I'm going to share with you the S&P as a benchmark versus the signals that we posted on the newsletter. In other words, these were posted on the newsletter for subscribers. So I'm going to take the S&P 500 and I'm just going to go back and I'm going to rewind now, look at 2020. How did the Planetary Speed Index do? If you just took those signals, how did the Fed use 3.0 do, which is the flagship indicator that we use to track the Fed on a longer term basis. And then I have a new Fast Fed 2.7, which is also posted. This is in the platinum section. So how did these compare to the S&P? So I'm not going to get into points or profits, but what I'm going to do is I'm just going to show you some graphs just to give you a basic idea of how these are performing, because we always want to gauge our performance off of a benchmark. Okay, so this is the S&P 500. This is 2020. And this is just if you were net long, how would you have done in the S&P 500? You can see here that it plunges down here during COVID, and then we've had this nice steady recovery ever since. So this is like a weekly plot. These are weekly plot points just to show how you would have done. So you recovered nicely if you stayed long on the S&P during the COVID crisis, and we know this is largely due to the Fed and also the stimulus packages too. This really helped the market out a lot. So the first thing I'm going to show you here is the Planetary Speed Index. So these are the actual signals of the Planetary Speed Index as they came up on the market. So this black graph up here, you can see here, I'm highlighting it here. This is the Planetary Speed Index above the S&P. So to me, in many ways, this is the most amazing one because it's not optimized. It's not optimized at all. It is what it is. These signals were predetermined before the year started. And you can see here that it does have a spike here in COVID, but then it goes up. It has a pullback for about 6 months, and then it starts surging ahead. And this actually beat the S&P 500. So this is a long and short. And if you just went long and short every time based off these signals, this outperformed the S&P 500 this year. So I found that to be amazing. Just the fact that this is all astrology. This is an astrology-based indicator. It is not back test. This is exactly as the signals came up on the newsletter, and it outperformed the S&P. So I thought that was tremendous. I mean, just the fact that it's all planets, Larry. This is all based on what the planets are doing. I found that to be tremendous, and this is my preference over the Bradley. So next, I'm going to look at the FedJuice 3.0. So here's the FedJuice 3.0. Now, the FedJuice 3.0 has done about the same as the S&P 500 here. The FedJuice 3.0 is this red line at the top here. And you can see that these trades last a long time. Sometimes they last 2, 3, or 4 weeks. These signals, these are the signals from the S&P. And there were a couple times here where the FedJuice did take some hits here. You can see here back here in March, and you can see back here right in November. It took a big hit here. And both of these times, interestingly enough, the biggest hits came when it was trying to short the S&P and the Fed was surging abnormally. Okay, so we had an abnormal surge back here in March, and we had an abnormal surge here in November. But if you think about this, it's still pretty impressive because you're going long and short all the time. These signals are buy and sell all the time, and you essentially did the same thing as the S&P, and you didn't have the drawdown that the S&P had here. So I still think it did very well, just the fact that you're going long and short all the time on these signals, and it's still essentially tied the S&P here. And the S&P had a pretty strong rebound there on of itself, but the main thing is your drawdowns were nowhere near that like they were. And then just to show here, I've started a new signal called the Fast Fed 2.7, and that is a new service on the Platinum service. So I'm just going to put this here. You can see this on the charts, this little sprout down here. This is, I know it looks like a little sprout because it just started in November, but this is doing very well too. So this is all the data that I have on that in 2020 essentially, but this has started out very well. So I'm happy with this. So the idea is that these indicators and these astro indicators and the FedJuice, and they're all doing well. They're all performing close to or outperforming the S&P. I think, which is really interesting. So on the next graph here, I'm going to show you all of them overlaid just so you can see them together. So this is just to show you, this is what's in the, like I said, this is what's posted in the newsletter, just to show you how these perform versus the S&P. And I think the interesting thing about this is, like I said, these are all long and alternating long and short versus the S&P. This is just the long pattern on this. So the Planetary Speed Index outperformed. The FedJuice 3.0 is about tied. And then this Fast Fed, take a look at this Fast Fed down here. This guy has only been running since about November, and it's almost caught the FedJuice for the year in 2 months. So this is on the Platinum service. These are swing trades, okay? So these are like, specific targets and stops, and this is a trading system where the FedJuice and the Planetary Speed Index, these are more like 2 to 3 to 4 week type of signals. But I just think it's interesting that they have performed so well relative to the benchmark, which is the S&P. So I just think 2020 was a very successful year. We had a lot of improvements here, and to me, if I had to pick one thing that I just can't, it's hard to wrap your mind around the Planetary Speed Index, how that did so well versus the S&P.
Okay, we'll be right back. I want to add a little bit about this because I studied George Baer quite a bit, along with Mr. Twentyman. We'll be back with Shane Smolian, WolfTraderFutures.com, 877-927-6648.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks, we're back. We're talking with Shane Smolian, WolfTradersFutures.com. Shane, let me throw in my 2 cents worth here about the speed index you're talking about. I assume that it's the speed of Mercury. Is that what you're looking at?
It's one of the planets. We look at everything, including the Uranian planets, but it's one of them.
Yeah. Well, George Baer wrote a book. He only wrote several books. One was called The Egg of Columbus, where he talked about some really exoteric things. And this book was for sale for $25,000 back in the mid and 1980s. And Norm Winsky had a copy of it. I later had a copy of it, but it was basically some really esoteric stuff related to astrology. But because of that speed index that he had talked about in one of his papers, Jim Twentyman was very, very enthralled with it. And so Jim and I went up to see him, to see his daughter. She was in a nursing home up in Carmel, California, and one of my good friends, Jack Valeni, serviced that nursing home. And when I talked to him, because he traded with me and stuff, and I told him about this thing, and he says, we've got a bear. I think her name was George Ann Bear here in one. He said, maybe that's her. And so he made a phone call over to the nursing home, chatted with her a bit, and sure enough, it was his daughter. And so Jim and I, zipped right up to Carmel from San Luis Obispo, and we spent half a day talking to her. She had some incredible pictures that she said she would give to us when she passed away. The attorney never followed through, but her father was so successful as a trader. He had a rail car just like the one from the Wild Wild West. She had pictures of it. It was incredible. Had a bedroom in it, everything you could, bathroom, shower, the whole thing, a bar, lounge room, and he would take that into Chicago during the summer months and trade there. And then in the winter months, he would go and trade in Carmel, where he lived there. And of course, he died a very wealthy guy and left her a substantial estate, not hundreds of millions, but I think a couple of $1 million, because she was certainly in a beautiful place where she was taken to. And when she passed away, nothing happened. I checked with the attorney, and we don't have anything, that type of stuff. But he was really really heavily into that. Speed of Mercury, and he was certainly successful. So please continue. I'm sorry to take your time, but that's my 2 cents worth. So
no problem, Larry. You know everybody. This is crazy.
No.
It's but that's an interesting story. I mean, the speed of the planets. I mean, and this is not even aspects. When we talk about the Bradley, we're talking about aspects. This is just the speed. I mean, so no matter how you look at it, Larry, this stuff works. I mean, you just have to work at it to find the right combinations. But to me, that's just it's unbelievable. And gold, I don't have gold up here, but gold, the Fed juice on gold did even better than this. So let's talk about the S&P real quick. Today is the strongest day percent statistic up. And I'm going to talk about that in a minute. I actually have some very short-term research that I do on statistics of the market. How do they perform on different days of the week? And I'm going to show you that in the next slide. But right now, the Fed juice is in a sell. The dollar juice is in a buy. The planetary speed index is in a sell. So you've got to see those two graphs. So now you know the importance of the Fed juice and the planetary speed index. Those two are the key driving players of the S&P. Also with the dollar too. But those two are really the most important. And the transits right now, we're still in a mainly red week. So this is still, from an Astro standpoint, still relatively negative, although the S&P is holding up pretty well at this point. I'm pretty impressed by it, to be honest with you, because we've had some very negative aspects coming in, as we still do. We have a lot of Uranus aspects, we've had Mars on the midpoint of Saturn Uranus. Mars is going to conjunct Uranus. Uranus just went direct. So there's all of this Uranus energy coming, which is unexpected events, but so far it's held up pretty good. Now, this is what I was talking about, Larry. This is really important because, and these change, by the way, this is just for this week, but these are the statistics. I look at the statistics of the S&P to know what are the best days of the week, and they follow patterns and they change over time. For example, Monday for the last few months was a very strong day, but now Monday is a very weak day. It's not that strong. Like it's not strong. In other words, the market falls down on Mondays. So the percent up on Mondays is only 38.5% right now. So for example, yesterday I had a fast Fed short, and it was trading on the futures were trading over the holiday, and I knew that was supposed to be a down day, right? And it wasn't going to, it didn't want, like you talked about with gold, they came off those lows, it didn't want to go down. So what I did was I knew that today, Tuesday, is a more positive day, and you can see where it says big there. You see where it says big there? That's the statistic to show you the type of big moves it likes to make. So right now the market, when it wants to make a big move, it makes it on Tuesdays. So I knew that so I covered the shorts yesterday on the S&P because I was like, okay, I'm looking at the statistic here on the S&P, and Tuesday, if it's going to go up big, it's on Tuesday. So this gives you a lot of insight into the day-to-day fluctuations of the S&P. And I have this for every single market too, and it changes every week. I update it every week. But this tells us right now that if you're looking for the strongest percent day of the week, it's Thursday on the S&P right now. That's what it is currently. But this stuff changes over time. So as you get out a month from now, it could shift back, and these days can move back and forth. There was a while during COVID, and you guys can go back and check this, that Thursday was the absolute worst day of the week. Like there was, every time you had a big decline during 2020, it was on a Thursday. So, this is just one tool that we use, and this is in the newsletter, but I try to give this for the daily guidance because the day-to-day stuff is really, to me, it's much more difficult than if you look at the Fed juice or the planetary speed index. Those larger moves tend to get away from the noise, but the day-to-day stuff, this can give you a little bit of a clue. So like right now I have the chart here. This is the S&P. And I took away a lot of the indicators just to kind of focus on these two because this is what we talked about. But the black arrow here is the planetary speed index, and the red one is the Fed juice. So you could see right now that both of those are pointed down. So, the odds are that the market's going to try to push back down lower again, even though today is a strong day of the week. There's a good chance this thing could try to head back down again after today, particularly since today was a strong day up. And then again, I post this every day in the S&P, but the daily statistics, I think for people who like to do the smaller trades, this is really important because I'm trying to give a big picture in terms of really long term, medium term, and the next day, the short term. So, this is what we're looking at here with the S&P in terms of that. So you got long term, which is the Fed juice. You got medium term, which is the planetary speed index, and now you've got this day-to-day stuff, which is usually we post around 2 o'clock every day, but these statistics will change each week. It's a rolling, changing phenomenon. So, it's just a tool that we offer, but I think it helps a little bit to, like today it helped with the S&P. Like I knew it wasn't going to go down yesterday because we had negative Astro. There was no negative events, and gold went down to that level you talked about, that 1800, and it bounced off hard off of those levels. So just something that we look at. Now, do we have time to talk about gold here?
Yes, we do. We got two. Well, we got a break coming up, but we'll be here after the break. So why don't we start, and then when the break comes, we'll continue after the break. So keep going, please.
Sure. Okay. So
we'll
talk about
there it
gold.
is. Okay, we'll be right back with Shane Smollian, WolfTraderFutures.com.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
Whatever you think about, you bring about. Whatever you focus on grows.
you see, I believe that everything in life happens for us, not to us, and Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're chatting with Shane Smollian, WolfTradersFutures.com. You want to continue, my friend?
Sure, Larry. So just briefly, I'm going to touch on gold because I know a lot of people like gold. Gold's in a positive seasonal, but it's selling off. Now, the seasonal is dealing with the annual cycle. The longer-term cycles are negative this year, but this is a clue because it's forming a negative divergence with that solar cycle. I call it relative market bias, but negative divergence. So Bitcoin has become the alternative haven for now. Mid-February, the seasonals peak. So if gold is not rallying by mid-February, then there will likely be trouble ahead. So this is not a good sign that it's selling off in terms of February or in terms of this positive seasonal. But never fear, the Fed juice picks this up beautifully. You can see here on January the 4th, the Fed juice goes into a sell here, and it's been into a sell ever since. Today we are going to get a little bit of astrological headwinds there. The CAT signal, which is a composite Astro, is going to go into a buy, but gold's in trouble. I mean, it's like you said, it's been in this bear market since August, and this is why I really like the Fed juice in these situations, because it picks up the tape, what's actually going on, and it gives you an idea of a trend for these markets. So it's just a little summary on gold. I do talk about that daily too, and I post the Fed juice and the CAT master signals. If anybody wants to get in touch with me, you can go to the website wolftraderfutures.com. I'm Shane Smolien, and we have newsletters there on every different market. There's a 7-day free trial, so there's no risk if you want to try it out. Just go there and you can chat with me on the website. There's a direct chat, or you can email me, shane@wolftraderfutures.com. And I do try to get back to every email. If you do write me and it takes me a day or two, I will get back to you eventually. Sometimes I get a little bit overwhelmed with the email responses. So, Larry, do you have any questions?
No, you did great, and I think anybody that doesn't pay attention to your bias of the trade of the day of the week is missing a great thing, because those are great statistics that these folks at Wall Street know this stuff, and because of the algo trading and stuff, I think it's very important. So those days of the week are super important. So well, thank you for sharing that with us. Okay,
have a great week, everybody.
Okay, we'll be back, folks, tomorrow. Live every day in an attitude of gratitude, and may God bless.